Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. Why did the price of Bitcoin spike? This video can apply to today, April 23rd, 2020, where the price of Bitcoin went up to 7,500, and it also can apply to the future, whether Bitcoin goes from 10,000 to 15,000 or 4,000 to 6,000, because every time there is a crazy spike or even a bad decline, there are always experts who think they know what the reason is, the reason why it happened. Using today's example, April 23rd, 2020, people think maybe the price of Bitcoin went to 7,500 because Bloomberg reported that Bitcoin is readying for a 2017-like leap. Or maybe it has to do with Tether, but then we see experts saying, no, Tether isn't pumping Bitcoin. Or maybe this is due to the stimulus package. Or maybe this is due to the Bitcoin halving coming up. But the truth is, in the end of the day, no one knows the reason why the prices go up or go down. And I'm not here to be the next person to tell you that I know the reason it goes up or the reason it goes down. But what I am here to tell you is something practical. And this is a method that can keep a person safe because we don't know whether prices will increase or decrease like crazy overnight. And this method that I'm talking about is called dollar cost averaging. This is the method, this is the practice of instead of taking a lump sum of money and investing it at once, you invest it over a longer period of time. So instead of investing, let's say $10,000 in a lump sum and not knowing the future, who knows, maybe the next day, the next week, you will lose all your money because of a crazy decline. So instead of taking your $10,000 all at once, you spread it over time. So maybe, for example, you'll take $1,000 and you'll invest it over 10 weeks. Now, this method is not something that I came up with. This is a very popular method, and it's one that was made very popular by Benjamin Graham, the author of The Intelligent Investor. And this is Warren Buffett's favorite book. And although Warren Buffett does not like Bitcoin, we can certainly learn from this man when it comes to investing. And the reason why Warren Buffett loves this idea of dollar cost averaging is because he believes that most people don't know what they're investing in. We like to think as humans that we are an expert in a field. Maybe we studied something for a couple years and we think we know it. But the truth is, as Warren Buffett mentions, to really be an expert, you are the 1% in that field or in that category. So while dollar cost averaging can protect you from losing a lot of money in a big crash that you're not able to tell that it's coming or that it's going to happen, it does prevent you from maximizing your gains. Because again, if you put in all your money in a lump sum at once and the next day there was a big increase, you're going to make a lot of money. So that 1% of people, those are the people that should be putting in their money in a lump sum. These are the people that, essentially have a crystal ball. And again, these are very few. As much as you think you know an asset, as much as you study, in the end of the day, you probably don't know as much as you thought you did. So using Bitcoin as an example, let's say in December 17th of 2017, you wanted to get into Bitcoin at its all-time high of $20,000. And you said, I know this, I'm confident, it's going to go up. Even if it doesn't go up, maybe it will go down a little bit and then it'll retrace and it'll go back up to 25,000 to 30,000. So you decided to put $20,000 in one lump sum. Today, April 23rd, 2020, your $20,000 would now be worth $7,500. This is more than a 60% loss in your money. Now, to show you the power of dollar cost averaging, I'm going to use an example of the worst time you ever could have bought Bitcoin. I'm not taking an average time. I'm taking the worst time you ever could have bought Bitcoin and show you the power of dollar cost averaging. So using December 17th, 2017, when Bitcoin was $20,000, instead of putting a lump sum in, you said, I'm going to split it over time. So let's say every week you would put in $163. Instead of a lump sum, you're just going to put in $163. December 17th, 2017, with a Binance fee of 0.1%. Today, April 23rd, 2020, not only would you be down more than 60%, you would actually be up 11%. If you're watching this, I hope you understand how crazy this is. This is absolutely amazing. how dollar cost averaging can really save a person from getting wrecked and losing all of their money. And if a person were to do dollar cost averaging, again, this is not my recommendation, it's not investment advice. I'm just showing you a method that has been used by even professionals, even by Warren Buffett, to protect themselves. And this is, again, for long-term investments. If someone is a day trader, swing trader, they want to make quick money, this is not the method that they would use. They do want that volatility. They do want to make risky trades. So again, this is for long-term investing. And if someone were to do this, they would want to make sure they're using a exchange that has a very cheap fee. They would want to avoid an exchange that has a flat fee. It doesn't work on percentages, it's just a flat fee. This way you will get burned, you will lose a lot of money. So you do want to opt for an exchange with a very cheap trading fee. And some examples are Coinbase Pro. So again, this isn't Coinbase, but Coinbase Pro, very cheap fees. Binance also has very cheap fees. But by the time you're watching this video, whether it's in 2020, 2021, or even further in the future, these fees can change. So it's always a good idea to check into your exchange and see what the fees are. An example would be the Square Cash App. When it first came out and they were trading Bitcoin, there was no fee. There was a little bit of a markup on the price, but no fee. But then all of a sudden, randomly, they raised their fee to 1.75%. 1.75% is very expensive for buying Bitcoin. And I have used Cash App in the past, but as soon as I noticed that this fee went up to 1.75%, I left it. I no longer bought any Bitcoin on that application. So in the end of the day, whether Bitcoin increases, whether it crashes, or whether we know the reason why, what we can do is we can protect ourselves. And like I said before, I'm not telling you to do this. This isn't my advice, but this is a popular method that has been stated and used over and over and over again, even by professionals. I hope that you found value in this video. If you like it, go down below, subscribe to the channel, like the video. Thank you for listening, and I'll see you next time.